Now, joining me now is economist Jeffrey Rosen of Briefing.com. Bloomberg has crunched the numbers, and Jeff is one of the top forecasters of existing home sales. So certainly important to hear what you have to say. And Jeff, these numbers that we saw overall, particularly this past week, do they show you that we're in a double dip or headed to a double dip in the housing market?
I don't think we're in a double dip quite yet. I think what we need really to do is wait until we get July's information. If we look at May's numbers, and we saw that the existing home sales were down so much, but a lot of that had to do with the fact that buyers couldn't get their mortgages in their closing on time due to the bank delays from foreclosures and from short sales. A lot of the sales that we expected from the pending home sale numbers to show up in May probably won't be pushed back until June.
So you're saying that we may actually still see some effect of the home buyer's tax credit in some ways until July.
Correct. The numbers in June probably going to be much higher than we initially expected before April's numbers came out and before May's numbers came out, namely because of these the bank delays that were pushing things back. I see.
Well, but Jeff, though, I mean, looking at other data points, though, can you make any type of conclusion at all as to what we might see after July then?
Well, that's what's really concerning. And namely, we get that fact from the new home sales. When you had this 300,000 level, which was the lowest in the history of the index, it really scared, not only home builders, but the economists in general. Builders have been building new homes in massive quantities ever since January.
Right.
And none of those homes are going to be available until August. So if we look at all that, we have a lot of excess inventory being built up. The assumption was that builders knew that sales were going to be somewhat strong throughout the rest of the summer, even though the tax credit expired. So the fact that we had this severe drop-off is a little bit scary.
Right. It could actually exacerbate the supply problem then, Jeff. Why is all of this happening, though, when the economy seems to be on the mend and jobs are coming back?
Well, jobs aren't coming back quick enough, and incomes aren't growing quick enough, and credit is still very, very tight. So as much as we're hoping that the economy is rolling along, growth is actually fairly subdued, especially when you consider how weak the economy has been. Okay,
then Jeff, in terms of solutions, is there anything the government can now do? Is there anything that can be done in order to buffer this type of fall we're seeing?
Well, you would think the government would want to try another stimulus plan, but I don't think there's political willpower, at least 2010, for that to happen. So what I think is going to end up being is that we may get a slight jobs package come out in the end of the year, but most of the new stimulus, if there is going to be any, won't fall until 2011.
Okay, so we may be seeing a type of market like this for at least maybe even the next 12 months or so, Jeff. But we've got to leave it there. I appreciate you joining us. Great to have you with us. Jeff Rosen of Briefing.com.